Hey everybody, and welcome to the TradeUI options tutorial about the best time to enter and the worst time to enter and all of that in between. And there's a video tutorial for option sweeps and real-time alerts. Now what I'm going to be covering essentially is just the basics. I'm going to be covering pretty standard stuff, keeping it simple for you guys here. But, depending on when you enter can also depend on a lot of things. If you're in the money, at the money, or out of the money. If you are in the money option, you have a little bit more flexibility of how long you can hold and what might be the best time to enter and exit. In regards to being in the money, if you're going for a longer swing or longer term, towards the middle to the end of the day, if it's on a downtrend or something like that, and you're expecting it to go back up, you're getting the most crushed value, so you have the best chance of entering at that point. If you're in the out of the money option, you run a significantly larger risk trying to enter towards the end of the day, closer to expiration, because that option has a significantly higher chance of being crushed. And then, of course, there's other things that come into play, such as the implied volatility. That's kind of what I was covering with the crush aspect, that you're buying the rumor and selling the news in an extreme fashion. So if you're trying to buy into an upcoming catalyst, that's good. You want to buy a lower implied volatility. My preference is between 50 to 60 and roughly as high as 85 when you're first entering. And then when you're willing to exit, you want to exit above the 100 rate. Now, if you're holding an overnight swing and it makes a big significant move, such as if it was you were holding an Apple call and then Apple really beat its earnings, that Apple call, that implied volatility, is never going to have as much volatility as it's going to have right at open. So the best time for you to sell that premium that you were holding overnight would be a sell to open, because you maximize that profit of that momentum. Of course, the momentum can carry higher, which it ended up doing in this last quarter for the Apple earnings, where it dipped, crushed the volatility, but then it ran even higher later in the day, and that volatility just kept going up and up and up, and so did the premium price. But that's not always going to be the same. And of course, the time of day can be relative. There's a lot of aspects that you can focus on in that regards, but depending on the day can affect, market sentiment, volatility, moving on unexpected events. So if for some reason, like with the Pelosi thing really recently, that they couldn't make a deal on the stimulus bill, so you had a sharp drop and then a sharp increase right back up. These kind of things you can't necessarily always predict, but if you can get an entry on calls or puts, usually a news catalyst will not hold very long if it's a sharp enough dip during the day. Of course, some might carry down longer, but the general thought being is that a lot of these are considered already priced in events. Like with the stimulus, they kind of already knew that they're not likely to make an agreement. That's why it dropped, and then it popped almost right back up afterwards. And, relative to when you might be interested in what you might consider, uh, the best time to be entering would be on the most downturn days. For options, if you're swinging or you're doing a long-term contract, because the options are at their most crushed value. According to Investopedia, the best day for that would be Thursday, and for the best time to sell would be on Fridays for those options, because the options are going to generally be moving more on the higher end, because stocks generally move up more on a Friday, and then they tend to crush throughout the day in the later in the day, so you can run more of a risk. And then, of course, you have the best month to buy stocks. According to Investopedia, once again, that would generally be December, November, April, and March. The worst times to basically be in the market for a bullish sentiment are February, May, June, and August, and September. just historically, that's just what it is. So these would be ideally the best times to enter for a swing or a longer term contract as well. If you think of that on the inverse aspect, then you're going to get in the most crushed value at those points. But of course, if you're just a simple day trader, the best time to simply trade would be in the mornings for the most volatility and towards the end of the day and into the open market for the following day for the most volatility, depending on if you're expecting a big move or not. The problem with holding overnight is you're trapped with that. And so if it's making a big move against you, you're kind of stuck in that option until the market opens again the very next day. But this was just a quick video of just some rough ideas. But, as you can see here, you had a trailing up all day on the most recent trading day of August 14th. And then you see a big significant dump. Obviously, the best time to have played this would have been towards the end of the day. You would have maximized the most out of your premiums even with this going up and trailing up all day, since it was kind of on an uptrend and it wasn't really being all that volatile, you would have made more on this a little bit of a dip than you would have made all day trading this uptrend with SPY. This is just a basic chart, but just a basic idea. And then this big jump right at the end of the day probably moved the premiums quite significantly. So it's all kind of dependent on the given day and what exactly you're trading to and what the event catalyst can be. So the best time to trade can vary quite a lot, but this was just kind of an overview of some ideas to benefit for you and put it in kind of like a simple way to think about it. And thanks for listening in and have a nice day.